Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to be sharing with you a little bit of cryptocurrency news. I'm going to have a look into Binance and figure out, or try to figure out, whether or not this is actually a risk, whether or not Binance could actually collapse. I'm going to see what I can do. I've got some nice data to show you. So we'll go through that, hit that like button, and let's get into it. First, I want to open with a joke. Okay, trade in the stock market during QE, quantitative easing, versus QT, quantitative tightening. We all have our personal journey with trading stocks. You can see here how I trade on the stock market 6 years ago during the QE period, and now when liquidity drains from the market, suddenly you find out who the real traders are, right? So anyway, that's that. First of all, massive news. Okay, the Bank of International Settlement, remember, this is the central bank boss, the central bank to the central banks, has announced a new policy that will allow banks to hold 2% of reserves in cryptocurrency. So it's no coincidence that whilst the price gets smashed down off the back of this FTX collapse, these central banks decide now is the time to step in and start to accumulate and increase the total reserves that they hold. Cryptocurrency mass adoption will eventually lead to its use as a means of payment. It's impossible to stop this, and this is from the Bank of Russia Deputy Governor. On a 4-hour Bitcoin chart, we have a leading diagonal in play. We zigzag up, break down into the 2, 3, 4, 5, up. So is this what is coming next? That remains to be seen, of course. I've been showing on this channel for a while. We are apparently working on a Wyckoff spring. Currently we're being rejected at this level, but the reason I bring this up is because Litecoin is actually in the middle of completing its sign of strength. It is back testing before potentially moving higher. So is Litecoin going to continue to lead? And if it is going to continue to lead, I would expect Bitcoin to play catch up soon. In the interest of full transparency for you, I would like to point out that, as I said on the prior video, if we lost 17,000, then I would cut this trade early. It was only 1% at risk, so that's less than 0.5% stop out for me. I will re-enter this position, and I will re-enter this position, as I said before, above, back above this blue line here, which is this low, and that will of course confirm that spring that I just showed you. Where is it? Back here. I also want to make the point though, and the case, in the interest of full objectivity, that we have quite possibly left behind a day 35 cycle high, which means for the next 25 days, we can likely expect downside. How low it goes is anyone's guess. For those of you that are championing 10, 12k or even lower, I think you're going to need to see Binance collapse, and I'm just about to get into whether or not that's a real possibility. Price action like this would of course be bullish, drop down into that cycle low and go, and I'll enter my long here. But I have to admit, given where we are in the cycle, given that we've likely left behind a day 35 high and have rejected off of this Wyckoff spring, that means most probably we likely have to come down into this cycle low, and therefore the long from me will come from this neighborhood here. So once I get a swing low out of that around the 6th of January, we'll long, and I think then we actually will have a very good chance at seeing some major upside for Bitcoin. Moving on to Binance. Is Binance a risk? Is there systemic risk for Binance? Could Binance be the next to follow in the footsteps of FTX? I had been saying for a few days that I didn't really think there was much of a risk of this happening. Then I found this clip. I'll just quickly play you a few seconds of this clip.
We want to be transparent. We want to set the golden standard for reliability, solidness in this space.
So do it. Would you be able to handle it if somebody asked you for $2.1 billion back? Would that be okay? Would you be able to still withstand things?
We're financially okay.
Including you have $2.1 billion to give away. If somebody came to claw that back, you'd still be fine?
We'll let the lawyers handle it. We are financially strong.
So when I heard this and saw this in this context, I thought that's really not a good sign. There's no smoke without fire. However, doing a bit more research on this, I believe, was not him saying they will let the lawyers handle this if customers try to withdraw their 2.1 billion. He was in fact referring to FTX, and therefore it makes perfect sense that they would need to let lawyers get involved, since FTX has indeed collapsed and owes a bunch of people money. So I do like the saying there's no smoke without fire, but perhaps this has been taken out of context. The BNB token price is selling off quite heavily, and I guess that's to be expected. We've had more potentially damaging news for Binance here, as Binance's proof of reserves were removed from an auditor's website. There's also a theory that CZ has starved FTX of revenue using 0% trading fees on Binance, which attracts the volume away from FTX and over to Binance. Then he shoots a headshot by publicly announcing FTC concerns and causing a bank run on FTX and a decline in the FTT price. And FTX is unable to cover the holes in the balance sheet. CZ acquires FTX, or at least the volume that was there. Thank you for playing. So sticking with this theory, and I'm not saying it's true, but let's just assume it is. If CZ really did take down SBF, and the FTX exchange. They were the second largest Democrat donor. What if this whole media smear campaign at the moment is in some way, shape or form related to a retaliation play by the feds? What if the US government is upset with them for taking down their largest donor and is now about to undergo some sort of retaliation play? There seems to be further evidence supporting this because there's quite clearly a smear campaign going on. Binance has put FTX out of business according to Kevin O'Leary. So I'll play you a 10-second clip here.
Binance is a massive, unregulated global monopoly now. They put FTX out of business.
And this is quite clearly not true because even if they had a part to play in it, that doesn't change the fact that FTX funneled customer funds over to Alameda. Alameda then just lost them. It doesn't change the fact they collateralized a lot of their debt and loan and obligation with their own exchange token, FTT, which was basically worthless and eventually went down significantly, meaning they no longer had any collateral to back their loans. So even if CZ had a part, even if we go back to this tweet and he did indeed reduce the trading fees on Binance to steal volume from FTX, even if he did shoot a headshot by publicly announcing FTT concerns and caused a bank run, that doesn't change the fact that this FTX exchange was run by criminals that were taking customer deposits and using them for foul play. It also doesn't change the fact that they were selling people paper Bitcoin that did not really exist. Just back in November 9th, you can see here that Binance made up, and this is of course when FTX was still going, Binance made up around 50% of the exchange volume. Fast forward to today, and Binance, as you can see here, makes up a whopping 79% of all of the volume. So there is absolutely no argument to be made to say that Binance is not now a monopoly. This is absolutely a monopoly. Coinbase being the second largest, sitting at 11% of the volume. CZ had this to say about Kevin O'Leary.
Lots of questions about firms like yours. Have you done the same? Has there ever been commingled funds? Have you ever taken any of the clients' funds and done anything with them? And again, why should we believe you? Because Sam Bankman-Fried told everybody, no, that hasn't happened. And he tweeted a lot of the same stuff that you've been tweeting in recent days, which I think gets back to this idea of show me the money.
Yeah, so let's get back to show me the money part. So Calvin omitted the fact that there's no records. That's not a problem to him. So he just want to talk to Sam and believe whatever Sam says. He doesn't want to look at the records. And if you look, and he wants to omit all the small spendings, $50 million, $200 million. $200 million is small spending. That's very convenient. He says he didn't know that Binance was a shareholder of FTX. So he invested in FTX without looking at the cap table. But he was very specific in the way he counts for a transaction 2 years ago. So that's kind of contradictory. So I think Calvin's a liar. So I think he's lying about a bunch of stuff. So that's his problem. To us, we want to be transparent. We want to set the golden standard for reliability, solidness in this space.
So do it.
So there you have it. That's what CZ had to say about Kevin O'Leary. As I showed you earlier, there have been concerns that the proof of reserves were removed from Mars's Group auditing site. However, since then, CryptoQuant has verified Binance's reserves and reports no FTX-like behavior. So I hopped into this, when I saw this, I hopped into CryptoQuant, and I thought I would go through this with you. Binance disclosed its Bitcoin Proof of Reserve report, conducted by an external auditor. The report shows that Binance's Bitcoin liabilities customer deposits are 97% collateralized by the exchange assets, and collateralization increases to 101% when the Bitcoin lent to customers is accounted. In the aftermath of the FTX collapse, a movement re-emerged to demand that crypto exchanges provide proof that their customer deposits are backed one-to-one. Binance's proof of reserve is a major importance to the cryptocurrency industry, as it is by far the largest exchange by trading volume and one of the largest by customer deposits. As I showed you earlier, they make up 79% of the volume now. Here you can see the customer liability report balance at 97%, and including the assets lent to customers for things like margin trading, you can see they are 101%. So can we trust Binance's proof of reserve audit? The short answer here is that we don't have to. We can use on-chain data to compare the results of Binance's proof of reserves report with CryptoQuant's estimates of Binance Bitcoin reserves. CryptoQuant's estimate of Binance's Bitcoin reserves is an estimate of the exchange liabilities, as they are calculated by clustering Bitcoin flows from customers' wallets to Binance exchange wallets. We can see that CryptoQuant data covered 99% of Binance's liabilities. On-chain data seems to support the proof of reserves report, customer liability report balance data. So the next question is, how are Binance cryptocurrency reserves behaving? Is this normal, or is it FTX-like behavior? And when analysing the exchange reserves, one would hope their behaviour to be smooth and to avoid seeing erratic movements. To analyse Binance reserve data, we can compare the evolution of their Bitcoin, Ethereum and stablecoin reserves to those of FTX. The chart below shows this data. We can see that Binance's reserves growth over time seems more organic with fewer upside and downside swings than that of FTX. FTX had many in and out flows related to non-FTX wallets, because of course they were transferring these funds in and out of companies like Alameda. And the reserves had dropped significantly, minus 93% in the case of stablecoins, days before the collapse. Binance's Bitcoin reserves are still up 4% since the FTX collapse happened. Reserves for Ethereum and stablecoins are down 6 and 15%, respectively. Of course, we are not implying that erratic movements automatically mean the exchange is not well collateralized, but it can tell us something about the wallet management practices and the difficulty for on-chain data providers to make better estimation of reserves. Reserves that move in an orderly fashion give us more confidence, and we should continue to monitor Binance reserve lows. Down here, you can see that the Bitcoin exchange in purple, the exchange reserve, continues to trend up. Ethereum is down slightly, and the stablecoin reserves are down slightly more. And I should point out that all three of these are for Binance. What does it look like in FTX, however? Here below are FTX. You can see the stablecoin reserves non-existent. You can see the Ethereum reserves almost non-existent, and the Bitcoin reserves absolutely non-existent. This is the difference between a backed exchange and a non-backed exchange. The next question is BUSD, Binance's stablecoin, fully backed? BUSD is 100% backed by reserves held in either or both fiat cash and dedicated omnibus accounts. These accounts are with insured US banks and or US Treasury bills, including through the repurchase agreement and or money market funds invested in US Treasury bills. A top auditing firm attests that the BUSD token are backed by US dollars on a monthly basis. So again, not the same as the FTT token. And the last question is, Binance's token BNB, does it represent a large share of their total reserves? Because part of the reason that FTX and Alameda collapsed, like I already said, is they were using their own token, the FTT, to collateralize loans. And then when the FTT price plunged, they no longer had any collateral to pay off their loans. So what does it look like in this context? Well, the metric they use is known as the clean reserve. This metric represents the percentage of the total reserves that are not represented by the exchange's own token. The closer to 100%, the better. And here you have a comparison. You can see OKX, Bybit, they both have 100% clean reserves, no foul play there, it suggests, at least pertaining to their exchange token. Crypto.com, there's been a lot of FUD around this, but as you can see, very close to 100. Binance coming in at just shy of 90%. So not the best, but certainly in my opinion, not something that we should worry about too much, and it's nowhere near as bad as Bitfinex or Huobi. So with all that said, we kind of seem to have a media smear campaign playing out. We seem to have proof of reserves that suggests there's not really any trouble. But Michael Burry here has pointed out that this is the problem. In 2005, when he started using a new kind of CDS, our auditors were learning on the job. That's not a good thing, and the same goes for FTX, Binance, etc., all of these exchanges. The audit is essentially meaningless because the whole space is so new and people still don't really understand it. And this could well have been part of the reason that Mars's group decided to pull out. Binance is more solvent than some of the largest banks in the world, than most of the largest banks in the world. So just think that through for a minute. And remember, if we all turned up to our local bank tomorrow and tried to withdraw the cash, then we would very quickly find out just how unbacked that money is. They really do not have it. And I'm not just talking about cash. They literally don't have the money because it's levered up to 100 to 1 in some cases. In closing, some wise words from CZ Binance. Maximum greed happens at the top and maximum fear happens at the bottom. I am not saying that Binance could not collapse. That's not what I'm saying at all. I have no strong opinion on this exchange. I do not use this exchange. So there's full disclosure for you. I do not own a Binance account. I do not have any money at risk on Binance. I keep all of my money on multi-sig cold wallets stored at different geographical locations because I truly understand what Bitcoin is. I am not in any way, shape or form trying to say to you that I think CZ and Binance could be trusted. I have regularly and consistently on this channel said that you should trust absolutely no one, and least of all exchanges. Based on the data we've seen so far, it does seem to me that the powers that be want to smear this man and want to make him out to be bad. The data from CryptoQuant, however, contradicts this completely and says that there's likely not much risk of Binance going under. There is a simple solution to all of these problems, and that is just don't keep your crypto on exchanges. There's a link in every one of my videos for cold wallets, so you can go there straight to the manufacturer website if you don't own one already. I will put out another video tomorrow for you and include all the charts looking for the week ahead. Traditionally, it's the 17th I'm noticing. Normally, I would be on holiday by about the 15th, and I usually don't come back to work until the second week here, so that would be like the 15th to 9th. That's my routine. That's my routine for Christmas time. This is my first year as a content creator. This is my first Christmas with a YouTube channel, and I think the YouTube algorithm will punish me quite severely for taking that much time off. So I'm not sure exactly how much content I'm going to be putting out over the coming weeks, but I will indeed be putting some content out. But I will be keeping an eye on the markets and updating you if there's anything worthwhile saying. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already. In the meantime, I hope you enjoy your weekend. All the best from me. Take care. Cheers. Bye.